It's like we took 3 steps forward and just 1 step back. We got 2 different inflation indicators over the past 2 days. It's Friday, July 12th, and I'm talking about the consumer price index that we got yesterday, which was a fantastic report for the Federal Reserve, and then the producer price index today, which shows a kind of a mixed message here from the inflation standpoint. But let's break down the consumer side first. On the consumer price index, it actually came in weaker than expected on both the headline and the core level when you extract food and energy. At the headline level, it actually declined for the month. So that's actually deflation. That was the first time we've had a negative number since May of 2020, so deep into the pandemic. On the core level, where we extract food and energy, it rose only 0.1%. Market was looking for 0.2. So that brought the year over year level down to a 3.3% growth compared to 3.4% last month. And that's the lowest annual rate since April of 2021. So great news there for the Fed. Not exactly where they want it to be, but it's slowly getting into that trajectory. We knew that getting down to 2% would take more time, be a little bit more difficult to do, but it is moving in that direction. In some of the details, the energy was a huge component. Obviously, that's why you saw a big decline in the headline level. Energy commodities were down almost 4%. When you look at new vehicles, used cars, and airline fares were down 5% on a month-over-month basis. On a year-over-year basis, they're actually down 5% as well. Used cars and trucks are down 10% on a year-over-year basis. So this is a lot of goods. And we know this as the supply chain and all repaired itself and demand for goods started to slow, then we would see this kind of in the prices, and we are seeing that. So good prices definitely lower. Now, the stickier side, the services and the housing, this is what we've talked about. Services only grew 0.1% on a month-over-month basis. They're still growing 5% on a year-over-year basis, so that's not great. We would like to see that much lower, but only growing 0.1%. So that was pretty good. Owner's equivalent rent. We've tended to see, 4/10, 5/10, 6/10 on a month-over-month basis. We got 0.3% for the month. So that is good news as well. That's the lowest month-over-month pace that we've had since April of 2021. Still growing over 5% on a year-over-year basis, but again, slowly getting down to what the Fed wants to see. So markets loved this yesterday, had a great rally. We saw some rotation out of the tech stocks. Bond yields were down. And this morning we came in to get the, I guess you could say, sister report to this, the producer price index. And unfortunately, producer prices came in hotter than expected. So on the headline level, the economists were looking for 0.1%. It came in at 0.2. When you strip out food and energy, economists were looking for 0.2. It was up 0.4. And when you look at the ex-food and energy on a year-over-year basis, it's now 3% compared to last month being up 2.3. So not the right direction from the producer standpoint. Some of those things are similar story. It was all energy and goods related, but services are still growing. Actually, services prices jumped up 0.6% and are growing 3.5% on a year-over-year basis. Now, this report today didn't do much to the expectation for Fed rate cuts. There is some people starting to price in the possibility of a July rate cut. I think that's highly, highly unlikely. I think this is even September is completely dependent on what happens with the next labor market report. And we'll get that. We won't get that until early August. That's all we have today. Thank you so much. Please like and share this podcast with friends or family. And if you would like to see any of our other podcasts, you can view them on verdence.com/podcast. Thank you.